Hey guys, just going to show you a simple trade video. Very clean chart, just going to cut it and draw a simple trade. So if a stock is going up, going up, these little breakout trades work really good. You're gonna have wicks here and there, some pre-test, but eventually you're gonna see when a stock really goes on volume or anything like that. But basically a simple trade is you're gonna come over here and you're gonna come over here and let's just say it's 269 here. And then this one is, we'll say 318. And you can do this with Fibonacci's or whatever, if it's target 1 or target 2, whatever you like to do. And here's a target 2. And well, let's just say that's actually a target 1. Let's go ahead and put that right around here. And then a target 2 maybe is 403. All you're going to really do is go at 269, or if you see a little more volume, I like to watch the tape. Just going to take a trade. And basically I would be planning this trade as the stock's going down. So if it can regain and re-break, I am prepared. Usually about 5-10 minutes ahead of the stock. So I'm going to say my signal or your entry is going to be 269. Or if you want to say 1 penny over, whatever. Now that's going to go in right here on this trade right here. So let me pull that up. All right. Let me find that on the screen. Do not know where it went. Hopefully here we go. All right. Sorry if I come off a little unprepared. And we're going to edit it just like we did this one, hopefully. And what we're going to do is put in that 270. And we're going to put that in the limit price right here. So instead of this price currently, we're going to put this. And then if you want to target 1, you're just going to go over here and hopefully during the open market, you can take a trade here to either one of those limits and try to hold your trade. So let's just say we're going to go to 403. And then we're going to put a stop limit probably at this smaller zigzag somewhere. Like if we're doing this one, we're going to put them at this, because if it does fail, it's going to fail. And at least you might as well not eat the whole thing. So right here, if this was, let's say this was let's say 224. You're risking 50 cents for $1.30. So you're going to risk this to get this. All right. So basically that's your signal or your entry. Your take profit. So your signal or entry is 270. Target is target 1, which is 318, or target 2, which is 403. And we're going to call this a take profit. And that's where you're actually going to get out of the stock automatically with this trade, because it's going to put in 2 orders when you put in this order. So it's actually putting in 3 orders. And it's also on some platforms called one cancels the other. And then the stop loss is just in case the stock doesn't react like you want. You're going to put some wiggle room for it to actually become a trade and start moving upward. And this is basically all you're going to do. And then you're going to click buy. And then this little buy confirmation is going to come over here with these parameters. It's just going to come over here and just be sitting here for a confirmation for one more time to confirm. And this is where you want to confirm your position size, your limit price, where the stock is going to, if the price hits this price, to take it. If you click it a little early, it's going to take the earlier price because it's going to be or better. So if it's at 250 and you jumped in a little early, well, you probably should have held your buy confirmation at the page for a couple more minutes maybe and push click when it got closer to 270 once you had confirmation, or at least visual confirmation that the chart is telling you what is possibly about to happen. And then you're going to take a trade and go through that trade. So that's basically all how you do it. Take a trade. If you think the stock is going to continue going up, take a trade after a pullback. And if it can regain and beat this price, then more likely buyers are going to drive the price up because they think the stock is worth more because it did beat a previous price. And that's basically how simple a stock is to buy. And then if you're doing shorting, you would do the exact opposite. Just if you thought the stock was going to fail, maybe at this area on the way down, you would take the trade at this price and shoot for targets on the way down. So there you go. That's how you would take a simple trade